How do you make returns in a low-return world?
It's hard, isn't it? We had him at Howard at a Coutts conference. Genius. We have to bear in mind he does specialise in distressed.
Yeah.
So does very well when the world is distressed, and we're nowhere near that. So it is a low-return world. It's not the market's fault that the basic building block, the treasury, the cash yield is so low. What would we say in his space? Financial credit. Financial credit, so national champion banks, CoCos, still a yield premium. You're still overcompensated for default of these national champion banks. But it is more difficult. So I understand where Howard's coming from. You know, yields are low everywhere.
Alan Greenspan, we've already had one guest, Jeremy Siegel, disagree with him. Will it be 1-1 or is it going to be 2-0 to the anti-Greenspan brigade, who basically says, don't look at stocks, look at bonds, and when it all goes whoops, everyone's going to be hit?
Kind of half agree with Alan Greenspan. Where he's definitively wrong, there is no bubble. Returns are going to be low. I'll tell you why there's no bubble in bonds. Okay, we cover the whole of the investment management industry virtually, and the hedge fund industry. And I know a lot of people there. Hardly anyone I know is long bonds. I think if you go to the States, I think maybe the guy from Double Line, Jeff Gundlach, if I pronounce that right, he's virtually the only one I know who's been long bonds. But generally, you find people short bonds. What you've got in the bond market is non-price sensitive buyers, whether it be central banks, in the UK, for example, pension funds and insurance companies. So it's not a bubble in a mania sense at all. But where I do agree with Greenspan is just Alan Greenspan, same name as mine, is that returns are likely to be low from government bonds, no doubt about it.
Dow 22,000, we're all talking about, could happen today, could happen very soon. We sort of joked with Jeremy, when's Dow 30,000? And he did the calculation, sort of early 2020s. What's going to derail this, what seems to be never-ending bull market in the US?
Yeah, so we haven't had a correction this year, and a correction can come from anywhere. And it's almost the holy grail of finance. What indicators do you look for a correction? One thing you don't look for is low vol. So everyone's talking about low vol and buying the VIX. That's terrible. Terrible idea. It's done more damage than Madoff buying volatility. So more wealth damage, certainly. So no, in fact, if you do the maths, low vol means you should stay long equities. If you actually look at equities and you look at environments of low inflation and low bond yields, this is kind of normal type valuations. So I'm not saying it's cheap. Of course it's not cheap, but normal-ish. So, look, there will be a correction at some stage. Who knows what the trigger will be?